Hey, what's going on everyone? It's Griffin here and I hope you're all having a great day as always. If you're new to the channel, then welcome, and you may have just noticed that I recently reached 50,000 subscribers on the channel. What a milestone. Thank you to every single person who has tuned into my videos, dropped a like, commented, and subscribed. Honestly, I could not have done this without everyone in the audience. So thank you so much for your continued support over the past couple of years. And I have so much new content that is coming up on the channel that I'm really excited to share with all of you. So once again, thank you so much. And in today's video, we're going to actually be doing a 50,000 subscriber milestone video, going over a Q&A at the beginning of this video, followed with my asset allocation in my entire portfolio, which I know a lot of viewers have been requesting for quite some time now. We'll be speaking about the different weights associated with each asset class within my overall global portfolio, and this isn't going to be a super detailed and technical video like we usually do, where we're diving into the analysis of a stock or whatnot. For today's video, I kind of just wanted to keep the tone light and entertaining. Now, I know a lot of viewers have been requesting this type of video from me for quite some time now, and one of the reasons why I've been somewhat reluctant in releasing this video going over my portfolio is because each stock, ETF, and other investment held within my own portfolio is there for a reason based on my own goals and strategy as an investor. So by default, this means that it's not necessarily going to be a good asset for you based on your goals and profile as an investor. And yes, I know I make videos speaking about stocks all the time, going over their balance sheets, financials, and other information, but that's just it. It's essentially a video where I'm diving into a company, unpacking their financials and their business operations to see whether or not for you, this would be a stock that you're comfortable with and aligns with your goals and overall portfolio strategy. And the absolute last thing I would want anyone watching my videos to do is just blindly follow different stocks and investments without doing your own research and seeing whether or not it fits within your own portfolio and the strategy behind it. For the most part, the content on my channel has the goal of sparking up conversation about various different investments such as stocks, ETFs, real estate, etc., and then learning along the way. So with that said, just keep in mind that today's video really is just for entertainment purposes as a fun 50K subscriber milestone video. I thought it would be fun to do. So on that note, let's get right into the Q&A section of this video. And if you're not interested in the Q&A, you can just skip right to the time marker that I've put on this video to go straight to the asset allocation of the portfolio. By the way, the questions in this Q&A were submitted by audience members, so I'm going to be reading through them. Essentially a week or so ago, I made a poll on the community page asking you to ask me various different questions. So I actually have not even read these, so we're going to be reading them through for the first time in today's video. I'll try to get to as many questions as possible, but I think there's around 20 or so things might get a little long. So the first question is from Solomon. He says, it's really well deserved. My questions are, one, how did you get into investing and realty? So I'll answer that first. I got into investing probably around 4 or 5 years ago, honestly, just through curiosity. Investing wasn't really something that any of my friends were doing or my family on a large scale. So I was kind of always just someone who's interested in money and growing my money over time. So just through actually just reading books, doing research on the internet, and then through university, some finance classes and stuff got me interested. And then realty really was more just from reading books and watching YouTube videos, to be honest. Years back, I got introduced to real estate through actually a guy called Matt McKeever. He's a larger Canadian YouTuber who speaks about real estate, so he kind of got me interested in that, and now the rest is history. His second question is, how much money did you start with and at what age? Kind of the same question. So the answer to that question is kind of the same. I would say it was around 18 years old when I actually had some disposable income to start investing with, and I probably started investing with around $100 or so, just putting it into an investment account and investing through a TFSA. So that's what I would recommend you also do if you're new to investing. You can start small and grow over time. The next question is from Zia Ansari. So this individual says, now that we may have a second wave of lockdown, can you do a video of stocks that benefit from lockdown? For example, I saw Zoom, Costco, and Metro have been going up. If you can analyze these stocks, that would be great. So yeah, I might make another video speaking about some more consumer defensive stocks, essentially a Costco and a Metro. These are going to be more consumer defensive stocks. And what I mean by this is regardless of the market cycle and what's going on in the economy, people are going to be shopping at Costco and at Metro, buying products there because, you know, they need to eat to live. And then other more tech stocks like Zoom, well, we've seen here with the whole shift towards working at home and stuff, that tech has really been booming because investors are quite optimistic on long-term tech stocks like a Zoom, which is video chat, as well as, let's say, Slack, which is an online working platform. Basically, all these companies where individuals are going to be working at a distance and communicating at a distance really is taking a larger market share right now. So I might make a video in the near future. Stay tuned. The next question comes from Boo_Justine, and he says, using a Wealthsimple account, having an ETF in a TFSA, would that have an MER? By the way, for anyone who doesn't know what an MER is, that is a management expense ratio, essentially the fees for an exchange traded fund. And then he says, if so, how would you pay for it? So I'm assuming he's referring to Wealthsimple Trade. So he's holding an ETF himself in a TFSA. And in this case, you're not actually paying for the MER yourself. It's already taken into account in the overall returns of the ETF. So that's essentially how you would take care of that one. Moving on now to the next user question. This one's from Ashish Taparia. I hope that's how you pronounce it. But this person says, hi Griffin. First of all, congratulations on this amazing milestone. Thank you. Your videos have been very valuable to me and I greatly appreciate them. More power to you. Thank you very much. The question is, what would your suggestion to invest money for a short-term 3 to 6 month time period specifically saved for a house down payment? So I'll answer this question first. Personally, if I'm saving for, let's say, a house down payment in the next 3 to 6 months, this is not money that I'm really looking to risk all that much. So in the next 3 to 6 months, that type of time frame is not really long enough, in my opinion, to guarantee steady returns. I always speak about investing for the long term, and the reason for this is that in the next 3 to 6 months, things can be somewhat volatile, especially in the current market environment. So what I would recommend doing is either just keeping it in a savings account. That's what I would personally do and have done when I'm looking to purchase a new property or a house, for example, which actually I'm in the process of buying a house and that'll be another video. But anything else invested in the market, I would say stay away from individual stocks. For me, that's just too risky. I would put them maybe in an exchange traded fund like a VIV or something. But even at that, definitely weigh your options here if you're looking to use that capital in the next 3 to 6 months. Unfortunately, I can't really just give you one individual position to invest in because this wouldn't be wise for me or for you. I hope you can understand. And then finally, this person asks, also, do you like pineapple on pizza or not? To be honest, I'm not a huge fan of pineapple in general, and on pizza, it can be okay, but I just prefer other pizza variations. So usually this is not something that I order. The next user question comes from Isha Tabadar, and she says, what's it like to be a finance channel in Canada, CPM, etc.? So I'll start with this question. It's really fun, honestly, making videos about Canadian finance. There aren't nearly as many Canadian financial YouTubers, so this is basically a space that isn't as saturated, and for this reason, I can have more of a close connection with the audience. It's really fun, and for me, that's really passionate about finance and investing in general. There's nothing I could really ask for more, and the CPM is okay. It's around $20 per 1,000 views. So not bad. And the second question from Isha is, how did you grow your channel at the beginning? So growing my channel at the beginning, honestly, is just consistency and showing up each and every week, posting videos about different topics that you're interested in and that you think your audience will resonate with. And then what I always tell new YouTubers when they're just starting out and they ask me, how did I grow my channel? I always say, identify 3 types of content that you're interested in, try them out, release content consistently about them, and then see what your audience resonates with most, and then focus on that. So for example, my 3 pillars of content now are stock market, real estate, as well as just general investing and finance in general, kind of. So those are my 3 pillars of content that people resonate with and seem to enjoy. The next user question comes from Nolan Batsist, and he says, hello, Mr. Griffin Milks. Can you please do another video on TD direct investing soon, please? So I have already done a video about TD direct investing. This isn't really a platform that I use all that much because I do all my investing on Wealthsimple Trade or Quest Trade for like 99% of all my investing. So I would recommend one of those 2 platforms. And by the way, if you need to open up an account still with one of those 2 platforms, make sure to check out the link down in the description where you can get some free money when signing up. All right, so this wraps up the Q&A section of today's video. Thanks to everyone who actually submitted a question. And if I didn't get to it, just make sure to leave a comment down in this video once again, and I'll answer them, I promise. So thanks a lot. And we will now go on to the second part of today's video, which is the asset allocation of my entire portfolio. Okay, so first off, let's speak about cash, because I actually have a decent amount of cash, nothing crazy or anything, but some cash that isn't invested into stocks or real estate and is essentially just sitting in multiple different high interest savings accounts waiting for me to invest. This cash amount at around 130-ish thousand accounts for about 25% of the total equity held within my investment portfolio. Now, I know what some of you might be thinking, Griffin, this is an investment channel. Why are you holding that cash and not investing it into the market, into say Zoom stock, and produce a 500% return on that invested capital? And don't get me wrong, I absolutely understand that rationale. You know, the 2% or less annual interest rate that I'm getting in that high interest savings account essentially is not going to make me wealthy or anything, but hear me out, because in my opinion, cash in a portfolio does have its purpose. In my opinion, having a decent amount of cash that's just sitting in the bank while markets are very volatile, such as what we're experiencing right now, definitely has its merits and also allows me to have higher mental clarity on the investments that I choose to make. What I mean by this is that when I personally started investing, and as most new investors are going to experience when just starting out, is trying to deploy as much capital and liquid assets into the market as possible without having enough cash in the bank to sort of fall back on and have peace of mind. What this usually creates, at least from my experience, is where you're trying to invest in high return stocks or high return deals without having a proper overall strategy in regards to the individual positions and your overall portfolio in general. And typically you're going to be looking at positions without doing the due diligence required, in my opinion, for successful long-term investing. That's what I've personally experienced when not having cash in the bank and starting to invest with the goal of just achieving the highest possible return. Usually it actually ends up being the opposite. So yeah, just having a decent amount of cash on hand allows me, at least as an investor, to be more analytical with the stocks I'm interested in investing in, and really just cool everything down and take the time to do the proper due diligence and financial analysis of the company's income statement, balance sheet, and everything else about the company. Keep in mind that even large companies like Apple, Microsoft, Google, and others keep significant capital on hand, or liquid cash I should say, in order to fund future business or investment deals. That's personally just my opinion right now about holding cash. Let me know down in the comments what your thoughts are, whether or not you think this is ridiculous that I'm holding this much cash. Let me know down in the comments. Also, if you're looking to get at least a somewhat decent annual interest rate on your saved capital, then make sure to check out the link down below to open an EQ Bank Savings Plus account. I think right now the annual interest rate is around 1.5% or so, which is definitely better than any other high interest savings account. So check out the link down below if you're interested in that. The next asset class that I'm currently invested in, you're most likely all aware since I've been releasing videos quite recently about it, and this is real estate. As of right now, the relative size of my real estate holdings in relation to the overall size of my portfolio is actually quite weighted towards real estate, but this is really just due to the nature of buying undervalued real estate property. Hopefully you've already had the chance to check out one of my multifamily property related videos. If you haven't, highly recommend it if you want to learn more about how cash flow works, as well as how I approach real estate deals. So essentially though, when I'm buying undervalued property and then doing strategic renovations and raising up the rents, well, I can basically just put a low down payment, anywhere from 5 to 20% depending on the deal, and then leverage up my money to a much larger full market value deal. That's market value is then active in the market, gaining appreciation over time. What I mean by this is when you buy a multifamily property, you can essentially put a small down payment, like I said, 5 to 20% depending on the deal, or more if you so choose, but typically let's say 20%, and then you're going to get an 80% mortgage loan to the overall value of the property, which you're then liable to pay back when you sell the property. With that said though, the beauty here is that by putting a small amount of capital into the deal, well, you're now controlling a multiple $100,000 investment, and you can reap the rewards of equity paydown each and every month, as well as appreciation of the overall value of the property in the market. And when we're dealing with hundreds of thousands of dollars here, 2 to 5% appreciation per year accounts for $20,000, $30,000, $40,000 in appreciation each and every year. So it's for this reason that I count the entire market value of each property as part of my investment portfolio. At the current moment, I have 2 rental properties, one of them being a duplex and and the other one a fourplex, and up until quite recently I actually had a second duplex, but I ended up selling it at a very nice profit. These real estate deals obviously take up a lot of my cash, and that's actually another reason why I like holding a decent amount of cash in the bank, so that if I do see a property that I like and I want to purchase really quickly, I can do so. The duplex has a 2-bedroom unit as well as a 3-bedroom unit, and once I personally leave the 2-bedroom unit, which I'm currently occupying, the monthly rents will be right around $2,100 to $2,200. I bought this duplex last year for $280,000, which in retrospect was a bit too much than what I would personally be comfortable with paying now for this exact same duplex, but at the time I was sort of in a pinch regarding my last apartment where I had to either sign for another year or purchase a property or whatnot. Anyways, regardless of that, what it would have been a more fair price would have probably been around $250,000 to $260,000. However, right now with the new rents, once I leave, the property will probably be worth around $315,000 to $320,000. So nonetheless, it's not that bad. And with these monthly rents of right around $2,200, the cash flow at that time will be around $300 to $400, so not that bad for monthly cash flow. And then obviously there's the newly purchased fourplex, which was picked up for $339,900, and the current market value for this at the new monthly rents of $3,285 would be somewhere around $475,000, so a very nice return on investment right out the gate in terms of equity on the buy on this plex. Now, the market value of these two properties being in the hundreds of thousands of dollars is why this portfolio is reaching up to around $1 million in market value, but obviously I do not have $1 million in actual equity built into these properties, as well as equity from other stocks, investments, and cash. I just want to make this very clear for anyone who might be wondering or confused. However, I do very much consider the total value of those properties to be the value of the actual investment portfolio, because in the market, it's those hundreds of thousands of dollars in market value of the properties that is actively working in the market in order to gain a nice appreciation on my investments. And in case you're wondering, each of these properties has between 20 and 35% of built and forced equity in them, and both of them cash flow, which is very nice. For this reason though, my portfolio is definitely a lot more concentrated in real estate than other investments such as stocks, ETFs, and cash. However, as a younger investor, this doesn't necessarily bother me as much being concentrated in one asset class, as I'm really building up my net worth here. And then once I have a nice portfolio and amount of capital, I'll then be looking to diversify my investments a lot more. Due to the nature of my real estate investing style of buying severely under market deals, doing strategic renovations, bringing up the rent, and then as a result, the market value of these properties, each time I'm closing on one of these deals and doing that work, it's significantly impacting my net worth. So this is something that really doesn't bother me all that much right now. All right, so we're now at the part of the video that you're probably most interested in, and that is my stock market portfolio, being the stocks and ETFs that I currently hold. First of all, let's speak about ETFs. Now, you all know that I'm a strong believer in holding a handful of ETFs for diversification of your portfolio and a higher level of stability than only investing in individual stocks. This is an investment philosophy that I've mentioned countless times on the channel, so chances are that if you've been around the channel for a while, you've heard me speak about this before, but I definitely practice what I preach. So the ETFs that I currently hold in my portfolio are VFV, HXQ, VAB, XIU, ARKK, as well as XIT. In my opinion, holding these specific ETFs provides my portfolio with enough diversification and exposure to markets and industries that I'm interested in, such as disruptive and innovative markets in the US, as well as some of the largest American companies, tech companies, and Canadian tech companies more specifically. In regards to the VAB ETF, which is a Vanguard Aggregate Bond ETF, this currently only represents around 5% of my stock portfolio, and I have not actually been adding to this ETF position over the past couple of months because, like I said, I now have a nice cash position, and this by itself already diversifies my risk to a higher level of equities in my portfolio. And over time, since I did not continue adding to this VAB position, well, the equities having gained value over the last 6 months or so has diluted down my fixed income position in the portfolio. With that said though, since I'm only 24 right now, I have a very long investment horizon ahead of me, and for this reason, I'm more comfortable being heavily weighted towards equities in the stock market as well as real estate. In regards to the total weight of all of these ETFs combined in relation to my overall stock market portfolio, it's around 37% of this stock portfolio, not the entirety of all my assets in question. The value of these ETF holdings has grown significantly since the beginning of the year, so during the market correction in March, and since then I've been purchasing fair amounts of each one, and for this reason it has grown significantly over time. Let's now speak about individual stocks. So we speak about individual positions all the time on this channel because I love digging into the financials as well as reading through balance sheets and income statements to try and identify some nice investment opportunities. I do hold a fair amount of the individual stocks that I end up speaking about on the channel because while I'm doing analysis for myself anyways, why not just share it with the audience? And that's essentially how I grew this channel over time. But for this reason, right now in October 2020, I hold around 25 individual stocks, and this is actually more than what I usually like to hold because I like to keep track of everything related to each individual position I have. So usually this hovers more around 15 to 20, but right now it's at around 25 individual stocks. I'm not going to be diving into my Wealthsimple trade or my Questrade account where I hold all these stock investments because, to be honest, the weight associated with each one really is irrelevant to you as a viewer because, again, these weights are really just what I personally am comfortable with based on my own situation and investor profile. So I'll rifle through all the companies I'm currently invested in though. So here goes. The bank stocks I'm invested in right now are Scotiabank, Royal Bank of Canada, TD, as well as CIBC. Renewable energy stocks, I currently hold AQN, RNW, as well as BEP. Utility, I only have Fortis, and marijuana stocks, I only hold Afria right now. Telemedicine stocks, I have both Doc as well as Well Health. And then for a real estate investment trust, I hold Granite REIT, HR.UN, and NVU.UN. I ended up offloading my AP.UN position. And my rationale behind this was that with the current market environment and everyone working at home, AP.UN really just invests a lot more in office buildings. So future, long term, I just saw other opportunities in other REITs or other positions. Tech stocks, I have Lightspeed, Shopify, Uber, Zillow, as well as Slack. And then for other various positions, I have Very Good Butchers and Real Matters, which actually has not been performing very well over the past little while, but it's going to happen where you're going to have some stocks that don't perform as well. And finally, I then have around 5% of my portfolio in junior miners, and these include Caldus Gold, First Mining Gold, Gold Mining Inc., and then Kirkland Gold, which isn't a junior miner, but those gold mining positions represent around 5% of the stock portfolio. And last but not least, I do have a very small position in cryptocurrency, Ethereum specifically. So if you've been following the channel for a while, like more than 2 years or so, you would know that I actually have a mining rig where I mine Ethereum. So this has been running for the past 3 years or so, and since then I've mined 6 Ethereum, or 6 actual Ether coins, I guess you could call them, and this has a market value of around 3,000 Canadian dollars right now. But this rig was split with my dad, so in my name I have 3 ETH for a market value of around 1,500 Canadian dollars, but this is really just for fun and I have no intention whatsoever of selling them. Those just sit in the account. I don't really ever think of them, and maybe someday they'll be worth a couple $100,000. Let's hope. Alright, so that pretty well wraps up today's 50,000 subscriber milestone video. I really hope you enjoyed it. If you did, please drop a like on this video, and if you haven't already subscribed, make sure to subscribe to the channel and hit the bell button so that you're notified whenever I release new content about investing relating to stock market investing, individual stocks, real estate, and so much more. I really hope that you enjoyed today's video, and I'll see you in the next one.